recording.
Yeah, that's fine.
And I'll reduce my screen and mute.
Okay. Let's see how we're doing.
So you're just going to do a quick introduction, Andrew, or pass it straight on to me?
As it's part of a series every Tuesday and Friday.
Yeah.
Just like to say hi on behalf of the organisations and then hand it over to you.
Cool.
Andrew, are you happy for me to reduce you to an attendee after you've done the introduction, so we keep the screens a little bit quiet?
Yes, yeah. I'm quite happy to disappear.
I can't do mine, otherwise we close the whole show down. Otherwise, I would.
We don't want to do that. We're up at 18 at the moment, and it's just coming up to midday. So I suggest we leave it a minute or two. Just give people, because they tend to all pile in about midday. Yeah, still coming in. Just leave it for another 60 seconds, I think.
Guys, I'll just introduce you and then maybe just make an introduction. Yeah.
I think I will make a start then, ladies and gents. So good afternoon and welcome to the latest in our series of webinars. I'm delighted to be representing Constructing Excellence Southwest, Constructing Excellence Midlands, Constructing Excellence Wales, the Housing Forum and the Structural Timber Association, all of whom have come together as organisations to provide these informative webinars on a Tuesday and a Friday at midday. I'm delighted today to be joined by probably the biggest array of speakers we've ever had in the 2 months we've been doing this. So welcome to James, to Emily, to Lawrence, to Dan. Now, how do I pronounce this?
It's Mache.
Mache. Okay, Mache. Apologies. I should have checked that out earlier. Really looking forward to what you've got to tell us today, because I think getting funding and so on is key. And I know you have some interesting and informative facts and figures and suggestions to give us, so that's great. Just before I dip out, because I'm going to be reduced to a member of the audience, so to speak, I would like to say that on the success of the social webinar we held last week with Boris Johnson, we're going to be doing another social webinar next Wednesday at 8 o'clock with Donald Trump. So if you would like to join us next Wednesday evening at 8 o'clock, all the details will be on the various websites and the Leaders Meets website. So we would invite you to bring along a glass of wine and sit back for an hour and just join us for a Q&A with the man himself. So without further ado, I believe I'm handing over to you, James.
Yes, thank you. Thank you very much, Andrew.
Thank you. Thank you.
Thank you. Hello, everyone, and I'm hoping you're all looking forward to a weekend coming up. My name is James Edgar. I'm a senior manager here at EY for Innovation Incentives. I'm going to be paneling the discussion today, so any questions or answers, please use the Q&A tab at the bottom. And there should be a raised hands toolbar, which you can use if you have any questions alongside the presentation that we're about to give. So what I'll do quickly is I'll just introduce you to our team. So we have Emily Williams, who's a senior manager in our Bristol office here today, and she'll be giving a talk. We also have Dan Culling, who's one of the engineering managers, Lawrence Toym, who is a patent attorney, and we have Maciej van der Steen, who is our senior manager with grants. So what we'll do now is I'm just going to share the screen. Presuming everyone can see that, okay? Okay. Can I get a thumbs up? Emily, can you see the screen okay? Yep. Okay, so we'll just go into this then. So the contents for today's agenda, we aim to spend around 30 to 40 minutes on the presentation, and then we'll have another 20 minutes of questions and Q&As at the end, or indeed during the presentation if anyone has anything to say. So the nature of this, we'll look into firstly the updates on research and development tax relief in construction and what's happening in this area. We will then go into stimulus packages and cash grants, and then patent box tax relief within construction as well. And that will be Lawrence, who's our fourth guest speaker today, discussing this. And then we'll have some Q&As to follow. So without further ado, we have the team here, and I'll pass you on to Emily, who will discuss the updates on research and development tax relief in construction.
I think it's over to Maciej for this slide first, sorry.
Oh, is it Maciej? Okay, sorry, Maciej.
Thank you. No worries. So good morning, good afternoon, everybody. So before we jump into all the individual packages and incentives available, we just like to always take a step back and look at it, let's say, from a holistic high point of view. So essentially, the way we try to engage with companies is we try to help them throughout the life cycle of the company and of the products they work on. So this is what we call the innovation life cycle. Essentially, what it captures is the whole journey from idea to invoice that you may have in your organization, because obviously some of you are research and development driven, but at the end of the day, you're all for-profits businesses, or at least you try to bring out things to the market that will benefit the bottom line. So essentially, we understand that you will go from a conceptual idea all the way to a sales or project revenue. And essentially, there's various sorts of incentives that are able to help you accelerate through that journey of development. And either if you are a company that's starting up, you may be a conceptual project in and by itself, or if you're a more mature company, you may have certain things already out in the market and other things under development. So you might be able to use different sorts of incentives at different times. So I don't want to spend too much time on this slide, but essentially from the very start on, you're starting to look more at things like grants and R&D tax credits, and those almost exist until the pre-commercial stage. And when you end up in the commercial stage, you're more looking at things around patent box and essentially reducing the amount of corporation tax you pay on the innovations that you commercialize. And I think what's important to note as well is that the closer you are to your concept, typically the more speculative and the more risky your innovation is, the higher support you would normally be able to get. So typically, looking on the slide from left to right, the amount of incentive typically goes down a little bit towards the right, but so does your risk, and you start to then go more into a commercial phase. So we'll first be focusing on the R&D tax credit. So I'll just hand back over to Emily, who will discuss that in more detail.
Thank you, Maciej. So I'm going to talk a bit about how EY has helped a lot of companies within the construction sector to claim this obviously beneficial cash incentive. As I'm sure you all know, R&D tax relief has been around for about 20 years now. Initially, it was seen to be a relief that was fairly limited to people in lab coats and focused on software or app development within the IT industry. And over the last 5 to 10 years or so, the relief has been viewed actually a lot more widely. A lot of companies in a variety of sectors have started to claim, such as manufacturing, engineering, and food technology. So one of the sectors that has been lagging behind in claiming is construction and architecture. We understand that claims made from this sector represent about 2% of all R&D claims made to HMRC, which obviously is particularly low. From our experience in speaking with a lot of construction-based companies, we hear time and again that they don't believe they're undertaking R&D, mostly because they are just doing their job, what they're qualified to do, and of course what they need to do to get the job done. But in reality, what we call those head-scratching moments, where it's just not clear how to go about a particular project, or where a sticking point arises during a project, that can represent qualifying R&D activity. So we found that a lot of companies are either not claiming at all, or if they are claiming, they're typically not claiming as much as they could do. EY recently undertook some research into the membership of a construction-based association, which showed that around 80% of the members were either not claiming or were only claiming a fraction of what they were entitled to through the regime. And there's a variety of reasons that could be for, and that can go from a lack of appreciation maybe of how widely the guidelines can be interpreted. So there are specific guidelines that dictate whether something qualifies for R&D or not. And within construction, the whole of the REBA construction cycle can incorporate qualifying R&D activities, right from initial strategy meetings through conceptual design, technical design, right through to manufacture construction stages. Another reason why people might not be claiming is that I've had experience of companies who have received advice from accountants where they've been told that they just don't qualify, or R&D advisors, you know, it may be they focused on the more obvious R&D projects and didn't explore all the different areas that could be claimed. And we also hear from companies that whilst they think they might qualify, they have a perception that making a claim could take a lot of time and valuable resource. Particularly at the moment, that's super important, obviously. And in fact, one of our most recent claimants, just last month, they expressed how, inverted commas, surprisingly pain-free the whole process was when they came and did a claim through EY. So that company had not been claiming already, but I think that's what had put them off from claiming in the first place. And we turned a claim around for them very quickly, and they've received a significant amount of cash back from HMRC. Another example of a claim made was for an architecture practice of about 180 employees. They'd already been claiming, and they were confident they captured all of their costs. But when we looked at their claim, we had held technical discussions with their architectural engineers, and we had a discussion around the projects, the activities they were undertaking, and were able to more than double their benefit. So that process that we undertook, which Dan is going to explain a little bit in more detail, it really focused around upskilling the employees through CPD sessions, lunch and learn sessions. Doesn't have to take very much time at all, and that empowered them to think more broadly about their projects. We looked at the costs included in the claim as well, so all of the potential costs, and we look as widely as possible. So where you're thinking about supporting functions and indirect activities which might be missed out of the, you know, when you're looking at the qualifying R&D activities, they're sort of around the edges of those, and they help support the qualifying activities take place. So that can qualify as well and really expand out a claim. So as I've already mentioned, R&D claims in the construction sector are lagging behind other sectors, and HMRC is still actively encouraging claims to be made within this sector that are quality focused, really substantiated from a technical perspective and in line with the guidance. And just a quick update then for those who've already heard about the regime and are maybe claiming, just that there's an increase in the large company rate. It's gone up from 12 to 13%, effective April just gone. That means a net benefit from making a claim is increased from around 9.7% up to 10.5% net. So it's about a 10% overall increase. So it just goes to show really the commitment that the government is making to funding R&D, along with the budget pot, which they've committed to double from currently around 11 billion per year to 22 billion by 2024. So in addition to that rate rise, HMRC recently has committed to processing R&D claims incredibly quickly. So a time frame of around 28 days, which means that it's a massive improvement for businesses that once you put a claim in, within a month, typically you should be receiving your cash back. And the claim that I mentioned earlier that they submitted at the end of March, by about 3 weeks into March, they'd already received their cash back. So very, timely, particularly at the moment. And just to point out the window of opportunity for companies who are looking to make an R&D claim or revisit an existing submitted claim, you can amend that, and you have a time limit of up to 2 years after the end of the accounting period to do that. So right now we're looking at companies with a May or June year end from 2018. You're still within time for that year end to make a claim or an amendment. So that's my updates on R&D and the tax side of things. And I'm going to hand over to Dan, who's going to talk a bit more around the engineering front from the claim process. Over to you, Dan.
Yep, thanks, Emily. And good afternoon, everyone on the call. So we've summarised the background to the R&D scheme in the UK and some recent updates from HMRC. And over the next couple of slides, we just want to explore just how broadly the R&D scheme can apply to construction companies. As most of you are probably aware, for a project to be qualifying under R&D tax relief, 2 criteria have to be met. Firstly, the project must seek an advance in science or technology, and that must be whilst overcoming scientific or technological uncertainty. So focusing first on the advancements, the R&D definition can apply to a very broad range of activities or stages of a typical construction project, as Emily has already alluded to, from design, development and pre-construction activities, during construction, such as development of novel or bespoke construction methodologies, specific packages of work, such as building facades, which are often complex and require significant development and prototyping, and the specification, installation and commission of mechanical and electrical equipment, particularly where buildings have been designed with stringent performance characteristics. And on the current slide, you can see some specific examples that give just a flavour of the typical activities that can be applicable for R&D tax relief. And to pick a few of these out, the design of structures with specific engineering considerations or functions, such as excessive load bearing requirements or projects located within extreme external or internal environments, advances in structural piling or tunnel boring techniques to allow construction in or alongside sensitive areas or unusual ground conditions, and the development of modular construction techniques to enable quicker and safer on-site assembly or integration with existing structures. And as you can see by the visual on the slide, by undertaking a workshop with your engineers and technical staff and articulating just how widely the R&D definition can apply to projects, a company's understanding of R&D often increases, leading to the identification of larger qualifying R&D costs and therefore an increased cash benefit to the company. Just move on to the next slide. Through our experience, we appreciate that it can often be difficult for technical staff to differentiate between the day-to-day challenges and qualifying R&D projects. And a response that we often hear is, I'm an engineer, it's just my job. And the key point here is to really stop and think about what aspect of the project was really challenging or what caused those head-scratching moments, i.e. did a particular aspect of the project require a period of iterative design or development? Did the team have to devise a trialing or testing program to verify a particular solution? Or quite simply, did it take a few attempts to get something right? And you'll see on the slide, we've included some typical questions that should be asked in relation to the examples on the previous slides. And again, to pick out a few of these examples, in relation to facade systems, which facade materials will be able to achieve the desired performance, which options provide better durability, and how can the weight of a final building structure be reduced in order to save time and cost in foundation construction. And on mechanical and electrical equipment, how can we manage the conflicting requirements of natural ventilation and noise attenuation, whilst also looking to achieve near to net zero carbon? And then in complex structural design, how do we design a cantilever building or structure that wouldn't otherwise be possible due to unique loading criteria, stringent planning requirements, or reliance on particular materials or environmental architectural reasons? So to summarize, we suggest that you stay inquisitive and ask questions. If you're working with an advisor already, do they have the technical specialist with relevant industry experience, and are they asking the right questions? And remember, a good R&D claim isn't just a large claim. The R&D report can be just as important to mitigate any lengthy inquiries from HMRC. So if we can move on to the next slide, James. So we've talked about some of the projects and activities and also some of the challenges faced by the construction and architecture sector, which would typically qualify for R&D tax relief. But why is the UK government actively encouraging R&D in the sector? So in autumn 2018, the UK government set out its strategy for the future of UK construction in the construction sector deal. And this deal committed £420 million joint investment from the sector and the UK government to help facilitate innovation and encourage companies to develop new technologies and modern construction techniques. This deal set out some key targets from the sector through to 2025, including a 33% reduction in the cost of construction, a 50% reduction in the time taken from inception to completion of new build projects, and a 50% reduction in greenhouse gas emissions in the built environment. And these were to be achieved by focus on 3 strategic areas: digital, off-site manufacturing, and whole life asset performance. And some of the innovations that we've seen since this deal was first announced include virtual and augmented reality, robotics and automation, wearable technology, construction software and mobile apps, prefabrication and modular construction, 3D printing, and advances in material science and material optimization. And one of the things to come out of the construction sector deal was the Transforming Construction Challenge and associated funding under the Industrial Strategy Challenge Fund, which Maciej will go on to talk about a bit later. And this fund committed up to £170 million, match funded by £250 million from industry, to create new construction processes and techniques, such as the development of standardized modular components from which buildings can be manufactured. And clearly, many of the projects and activities we talk about in the context of R&D tax relief are linked to the themes set out in the construction sector deal and this Transforming Construction Challenge. But unfortunately, however, not all companies were quick enough off the mark or even knew about the challenge, and were therefore unable to capitalise on the funding. And the last tranche of this particular fund has now been allocated. EY maintains strong relationships with Innovate UK and the various challenge directors, however, and we are confident that the government will continue to support the sector, and we will see more construction innovation related funding in the near future. And as soon as we get more clarity on this, we'll be happy to share this with you all. So on the current slide, we've picked out a couple of quotes, one from the current IC President Paul Sheffield and also the current Housing Minister Christopher Pincher, which suggests that investment in infrastructure was good for the nation's recovery during the last recession, and that investment in housing construction should look to move further towards modern methods of construction. And with respect to housing, to date, more than £233 million worth of loans have been agreed for projects using modern methods of construction from the Home Building Fund already, and that fund is also covered on our later slides. So James, if you move to the next slide, please. So we've covered how broadly the definition of R&D can apply to construction projects, but it's equally important to get the process right when making R&D claims, particularly for companies undertaking a large number of projects year on year. At EY, we recognise this, and we're now using our in-house R&D technology platform to assist clients in preparing their claims. And for those of you who are aware of or actively involved in the R&D tax process, will know that the process can be laborious, large and cumbersome data sets, and often having to look back and record details of projects that happened over 2 years ago in some cases. So the platform has revolutionized how we deliver claims and allowed us to establish a real-time process, meaning our industry specialists can work with your engineering and technical teams to discuss projects as they're happening, meaning that technical detail or knowledge is not lost. This has not only allowed us to maximise the claim benefit for clients, but has ensured that projects can be substantiated to a much greater level of detail. And this is becoming increasingly important with HMRC. As more claims are being submitted, they are now scrutinising more claims as well. And to summarise, some of the benefits of using the platform include the ability to model using prior year R&D data when compiling claims, quarterly refresher workshops to capture R&D activity in real time throughout the year, ability to align claims with corporate budgeting cycles, so claims can be updated on a half-yearly or even quarterly basis whenever that data is available, increased level of accuracy when estimating claims for financial forecasting, and no data manipulation or templates required. The platform can ingest and interpret raw company and project data. And we're happy to take conversations offline to provide more detail on the platform and how this could actually potentially benefit your business. So if we move on to the next slide, and I'll hand over to Maciej to provide an overview of the overall grants landscape in the UK and how some of the current schemes may be applicable for construction companies. Thanks.
Thank you very much, Dan. So in this slide, what we're seeing here is more a timeline view of the various incentives that exist. So essentially what we're trying to say, and we just spoke about some of the expenditures that you can incur on the R&D tax credit scheme, which is essentially money you could be bringing in now for developments that you've had in the past. For the future, so for things that are coming up and for activities that you will be doing in a few months' time, you could theoretically apply for grants if there's a fit with the available grant programs. But in the middle, because we're obviously now in a COVID-19 situation, there are also the COVID-19 stimulus packages available that I just want to briefly touch on. So essentially, we're looking at different sorts of incentives around loans, rates, and grants. I guess within grants, there's also the furloughing scheme, which is essentially a paying scheme to support you to keep on staff throughout this period. So the reason why we're just touching on this is because probably a lot of you have been looking at these packages, and it really depends on the situation of your business at this time, which of the packages you should be going for. But the key importance of this is that the packages are not designed to help companies that were in trouble prior to COVID-19. It's really to help the economy carry through this particular economically impacted situation due to COVID-19. So one of the key messages I would like to transfer on this slide is that whenever you go for one of these loans, the burden of proving that you need a loan to cover off short-term cash flow requirements caused by COVID-19 will be squarely on the applicant. So what that means is that you will need to present a cash flow analysis that shows that you have been doing well prior to the COVID-19 situation, that you're currently encountering an issue or a dip in your cash flow caused directly by COVID-19, but also that you fully expect your business to recover post-COVID-19 to the point where you'll be able to service the loan as one would normally. Obviously, there is a higher risk allowed within these loans, but the principle remains quite similar to commercial loans that you may be able to get. So a lot of businesses have found it very hard to convey this message effectively. So I would be really interested if you had some communications with your bank, if you've had some experiences that are either good or bad. I would be really interested to have some information on that in the chat or later live during the Q&A. And on the furloughing side of things, it's really designed to keep staff available and let's say available to your business while they're not working. So rather than making them redundant, you still pay their wages and are subsidized for that by the government. So with that, could we please jump onto the next slide, James? Thank you very much. So to look at cash grants, which is really the future funding that you could be getting, I think that's really relevant right now for many sectors, but in particular for the construction sector. What we're looking at here is a whole host of funds that are available for future activities. Essentially, what they all have in common is that you need to apply for funding before you start any work. And a very good example of a typical fund that's being administered in the UK is the Transforming Construction Fund that Dan touched upon earlier. Essentially, these are designed to stimulate certain parts of the economy. So obviously, this one was designed to help the construction sector be greener, more competitive, more efficient, and let's say more innovative, because it was lagging behind a little bit in the uptake of various sorts of technologies. In normal times, we're looking at essentially a twofold split between funding. One is more innovation driven and the other one is more investment driven. So typically Innovate UK will provide funding on various types of activities that incorporate new technologies that allow you to test new methodologies, new ways of working, but always ways that will lead to economic benefit for the company and for the UK. On the other hand, so that's a little bit similar to the R&D tax credits, but it's essentially the funding you can get through grants is higher, but it's also more competitive. So it's a bit of a risk-benefit approach that you need to take here. And we essentially help companies identify which the best grants are. On the other side of the fence, there's things like economic funding, typically through the lab network, which is really to build out your business, to employ new staff, to either get new design facilities, simply build out your economic presence, things like that. So essentially it's a quite complicated landscape, but the key message here is that for many businesses there is grants available that can help them essentially get quicker where they're going anyway. So it's worth having discussions with that about that with local government or people like us to understand if there's any sort of way you can incorporate grants into your business and essentially help you do better. And for this particular time, there's also the COVID solutions funding, which you'll see on the left hand of the slide. What this is really a very special kind of project that was opened by the government. It's a grant funding program that doesn't have any particular limit to the amount of funding that you can receive. It doesn't have a particular limit to the amount of funding they can give out. All it says, it needs to be new research or innovation that will help resolve issues caused by COVID-19. So for the construction sector, you can think about various aspects of maybe incorporating more remote working, helping people stay safe at the construction site, maintain social distances, maybe wearable technologies also to look at the proximity of people to one another, maybe disinfection of certain services, things like that. So anything that you feel is a barrier currently for your sector to operate within the COVID-19 situation, if you're working on a solution to that barrier, you may be applicable to apply. It may be applicable to apply for the COVID-19 funding. So can we go on to the next slide, please? So just to make things a little bit more tangible, the Industrial Strategy Challenge Fund that we spoke about has had a number of different funding rounds already. It's currently not open for funding, but we are expecting that at some point in the future it will become available as well. And what this graph is showing is essentially an overview of the amount of funding the various organizations received through this fund. So you will see that there's quite some significant numbers there. And more importantly, I think these companies are all, and these entities are all doing something new that will help them drive future value for their business. And what it also means is that they're highly likely to collaborate with other businesses to test new technologies, develop new methods of working. So essentially they're driving the sector forwards to the benefit of their own company and to the benefit of the UK. And we do have a few examples of the types of projects that were funded as well. If we can go again onto the next slide. So over the next 3 slides, there's 3 different examples. I don't want to obviously read out all the text because you'll receive these slides over email. But I think what's really interesting to note is that what all these projects have in common, and I'll run through them in a second, is that they're all addressing a specific need, a clearly defined need that exists within the sector. So for instance, this first project is around delivering affordable homes at scale and at speed, obviously using new technologies and new methodologies. So it is resolving an issue in the UK of not enough homes being built and resolving or relieving the pressure on the housing market. If we can just go on to the next slide as well. This one in particular is about the use of 3D computer vision and BIM methods, so 3D visualization, to essentially make the building sequences more efficient. So this is obviously helping reduce the time it takes to build things. It's also reducing the amount of cost that's required. So it's all about making the industry more resilient and more prosperous, essentially. And the final slide is the final example is quite similar. It's about using on-site IoT sensors and things like that to essentially optimize the use of equipment on the construction site to make things more fluent, more optimized, and again, to drive down cost, drive down time, increase efficiency, and increase safety. So those are obviously topics that will speak to the construction sector across the world, I would say. So there's what is becoming really clear from these three examples is that they're either really technology driven or really need driven. So either people are trying to introduce new technologies that they'll then have to prove the value of throughout the life cycle, or they're identifying a very clear need that they're then resolving using their ideas. So if we can just go on to the next slide on the final point. I think everybody is really confused by the previous slides, just because there's so many different grants available. The landscape is really complex, and much like Dan presented around the R&D tax credits, we use our own platforms to navigate the various grant programs that exist. So essentially there is no one website where you can find them all. We pull all of that data into one single platform that we can use to interrogate what sort of grants are available, what sort of companies have bidded for these grants in the past and were successful, and essentially who collaborates with whom. And equally, if there's a certain topic you would be interested in, we can look at what funding has been handed out for similar topics, maybe what the state of the art currently is that you need to show you're improving on, things like that. So I guess the bottom line is, if you're really interested in funding, knowledge is key. And obviously we can help you engage with the relevant information, so to speak, to help you guide through the process and establish whether or not grants would be a sensible thing for you to look at. Thank you, and I'll hand over to Lawrence at this point.
Thanks, Maciej, and good afternoon, everyone. So I'd just like to spend a few minutes talking about the patent box regime, which has been around for a few years now. Sort of came in 2013 and had some modifications a couple of years ago. At a really high level, what it delivers is a 10% tax rate on profits that are attributed to patents, and so that compares to the normal corporation tax rate of 19%. And in real terms, what that means is that for every £1 million of qualifying profit that you bring into the regime, that's worth a cash tax saving of around about £90,000 every year through the regime. So in order to qualify for it, you have to hold or exclusively license some qualifying IP rights, and typically those are UK or certain European patent rights. And once you have those, then really all of the profits from the sale of products that incorporate that technology, any ancillary accessories that go together and connect together with those products, all of those profits can come into the regime. You can also bring in any license fees from licensing out your technology, and any patented processes that you actually use in the delivery of your business activities can also generate sort of profit and tax benefit through the regime. So there's a really sort of wide sort of gamut of ways in which revenue and profit can come into the regime and benefit from the lower tax rate. There are also sort of requirements to carry out R&D activities through the regime, and to meet certain conditions around developing the IP and actively owning it. Typically, those are quite readily met by single entity sort of companies. That they're not too challenging. But where you have sort of larger, more complex companies where different activities are spread out over multiple entities, there can be sort of additional complexities that come into play. One interesting thing about how it sort of relates to the construction sector is that we know from statistics that have come out from HMRC that really the sector is sort of underutilizing the regime, compared to to manufacturing and scientific and even sort of financial services. The regime itself is worth around about £1 billion a year to UK businesses. That's the sort of around about the tax saving that they're receiving. And for the construction sector, if it was to, companies there were to elect in at the same rate as the manufacturing sector, for example, that suggests there's around about a £300 million sort of pot of cash tax savings there that's there and sort of ripe for the picking. One thing that we find with the regime is that sometimes companies just aren't aware of it and aren't don't sort of realize that their activities could in fact either lead to patent inventions, or they already have patents and could take advantage of the regime. So if we go on to the next slide, what we thought would be useful is just to give some examples of construction sector sort of technologies that that are both commonly sort of used, and also ones that perhaps people sort of haven't really thought of sort of before. So the first point to note is that when we think about sort of patented technology in the construction sector, we're often sort of thinking about sort of particular types of products, right? So, there might be new formulations of concrete or steel, other sort of new materials. Could be sort of interlocking mechanisms to help support structures sort of come together in particularly sort of solid ways. The different designs that can come around different sort of construction products. Really the list sort of goes on, and it covers the full gamut of activities in which sort of R&D is going on. And really the main question when you're thinking about sort of patentability is whether what you're doing is new to the market, and whether it has an inventive step. So whether it's an innovative approach to problems and technical issues that you're trying to solve through your business. These two examples that we've got here are examples around actually some recent sort of successful applicants for the Transforming UK construction grant competition. The first one there is sort of quite interesting. They got funding for developing a scalable construction management and reporting platform. And what their technology really related to was a 3D sort of computer modeling technique for detecting the differences between 3D scenes. So where you have sort of CAD and building information modeling, graphical models, they can obviously change in design over time, and this is sort of a mechanism to really track those changes through an automated fashion. Here, what that technology can be incorporated into is effectively a software platform that can then be licensed out, and all the revenue from those license fees is eligible for the 10% tax rate. The second example that we've got here is around some digital sensor technology, again for a successful grant applicant, and this is around monitoring sort of concrete application and redistributing surplus concrete. And their patented technology there relates to effectively a spraying device and a distance sensor on that device. And in this case, rather than selling out the product, they use it either to rent out the machines or actually provide services themselves. And just to give an idea of the level of benefit, if that's sort of driving around £4 million in profit within the business, that's around an annual cash tax saving of around £270,000. The final point here we just wanted to talk about was around sort of modular construction. As Dan mentioned earlier, it's obviously sort of a topic in an area that's really grown a lot in sort of recent years, and we're seeing more and more patented technology sort of coming through on that. It's just a little graph of a subset of applications that relate to this sort of technology over time. And it's really the point here, I suppose, is that whenever there are new construction techniques that are really being thought about and trialed, it's inevitable that there'll be new potentially patentable technology that's coming through. So to the extent that you're undertaking R&D and and coming across problems through the provision of these sort of through the use of these new techniques, there's really the potential there for patentable technology. If we go on to the last slide. James, thanks. So finally, just wanted to end with a little bit of a checklist, I suppose, of things to think about whether or not your company might be eligible for the regime. And the first point to start with is whether or not you've been paying corporation tax over the last couple of years. So like the R&D regime, you're able to elect back in time. So for a December year-end company, there's a deadline at the end of this year to elect back into the regime for your FY18 accounts. So if you've been paying significant amounts of corporation tax, then that's a real marker that it's really worth thinking about whether or not the patent box regime might apply. The next element is whether or not you actually hold or exclusively license patents and whether they drive profits within the business. One thing that we often find is that because the patent box sort of sits at the interplay between patent law and tax law, there's often a belief that it's quite challenging and quite complex and a little bit sort of too hard. But we've got tools that really just make that process much easier, and we can help you sort of walk through the process of going through the eligibility requirements and and actually making a claim and deriving that benefit. It's always worth sort of thinking about your future activities when it comes to patentability. A patent can only be applied for if the invention has been kept completely confidential. It can't have been disclosed anywhere else in the world. And that sort of has a flip side, which is that for some businesses, they have trade secrets that they've kept secret within the business perhaps for quite some time. That might be around manufacturing processes, for example, as well as ongoing R&D activities. And there's always the potential that some of those could be patented now and help start driving benefit into the future. It's always worth thinking about IP ownership provisions and contractual agreements when you're working with other contractors or other companies, so that you ensure that you own the sufficient rights that you need in order to benefit from both the patent box and have the rights to exploit that technology itself sort of going forward. The final point to note is that the patenting process can be relatively sort of cheap, quick and easy. It's certainly possible for it to be, complex and expensive, but there are techniques that you can use and filing strategies that you can take that really keep those costs down, make it sort of much quicker. It's possible to obtain a patent within around a year, for example, if certain sort of requirements are met. And the other element is that we're focusing here on the tax benefits, but really there can be a lot of commercial benefits as well that come from protecting IP, and these can be really significant. So when you're thinking about this, it doesn't have to be just for the potential tax benefits, but all the other sort of commercial benefits can flow through from protecting IP. So I hope that's been sort of a useful run through, I guess, of the incentives on offer that come across the innovation lifecycle. I'll hand over to James in a minute, but of course there's plenty of detail that sits behind all these regimes, and so we're really happy to sort of take any questions that you might have. James.
Thanks for that, guys. That was very useful, very interesting. I was just conscious that we have a few questions. So if I get the Q&As up. In the chat. So I have some up here. So what I'll do.
Yeah, there was one question in the chat, James, where Nathan asked about the limits on the number of claims a company can make. And I've responded in the chat, but basically my response is saying that there is no limit. As long as a company is undertaking qualifying R&D activities in any year, they can carry on making an R&D claim for that year. And the time limit, as I mentioned earlier, so we're looking right now, there's 2 years from the end of the accounting period to be able to make a claim, which is why right now we'd be looking at May and June 2018 year ends, and anything post that period. So if your accounting period is just finished, you've just had an April 2020 claim, and you think actually there was a project in that year that could potentially qualify for R&D, then you can make a claim as soon as you've got your tax and accounts available. So, and actually we can be working alongside that work being done by your tax or accountant to prepare a claim at the same time, so that when that's ready to be submitted to HMRC, we can submit it all together along with the R&D claim.
Okay. Is there anything else? Does anyone have any questions, or guys, is there anything else that you'd like to add to today's discussion?
Please raise your hand and I can open up your microphone and screen and you can ask a question, and don't be shy. If you want to stop sharing your screen, James, people see a bit more of you. That's
there we go.
And yep. So.
And of course, if there are any questions that people don't feel comfortable bringing up in this sort of forum, then more than happy to have a discussion with you offline. I believe the slides are going to be shared, and as you saw just at the end of the slides there, our contact details are on there with email addresses and phone numbers, so we're more than happy to have an offline chat. Yeah, just give us a call or drop us an email if that's the case.
What more things do you think the government might do, given its now extended furlough, to help the smaller sort of businesses who haven't necessarily been able to take advantage of grants, etc.
It's for you, Maciej.
I was afraid it may be. So essentially, as you've seen, the government has taken a very reactive approach. So the initial schemes that were announced were really very broad brush schemes, and essentially a lot of businesses have been left out initially. Very good example is the loan facility for smaller businesses that was initially 80% backed by the government, and now there's some 100% backing going on as well. So I think, especially in the construction sector, one of the things that we may see is more the uptake of some contracts by the government itself. But it's a very good question, essentially, and I think we'll start to go towards a second round or a simplified round of loans again that are being administered. So initially, the CBILS and things like that were announced to support businesses and help them with their cash flow. That's why I mentioned earlier. If somebody would like to share their comments in the chat box, it would be much appreciated, because we've heard very mixed stories, and we've essentially helped a number of companies in securing these loans, but it has been a mixed bag for a lot of people, them not being able to necessarily secure the funding. So these funds, it's unlikely there will be specific, completely wildly new things made available, but it will be mostly variations and adaptations of the same schemes. So, for instance, there is now the Future Fund out as well, which we haven't incorporated yet because full details haven't necessarily been announced. But that's essentially to build up the from the bottom up, the most innovative companies will receive some additional backing to help them carry on and do research and development. So I guess. I know I'm slightly evasive on the question, but new funds are being announced, but they're likely going to be tweaks of what we already have to make it more accessible, more than anything else.
Thanks for that, Maciej. Does anybody else have any questions at all? I'm conscious we did run through quite a lot.
Doesn't look like we have any
Right.
questions coming up, so
Right.
maybe we'll finish up there.
Yep, absolutely. And thank you very much for attending, everyone. We'll, as stated, send this out to you. And if you have any questions, then please do get in touch to discuss further. We wish you a very nice weekend.
I've just brought Andrew back. I'm sure Andrew would like to say a few words. So over to you, Andrew.
Yeah, I would just like to add my thanks to you all from Ernst Young. I won't mention you all by name again. So many of you. But really, thank you so much information imparted. As always, thanks to Howard and John for hosting. And to everyone else, thank you for the last hour. I hope you found it as useful as I did. I'm going to be contacting you guys, actually, about a research project I've just done within the STA. We've just spent £250,000 on fire research. So watch this space. For everyone else, we're back again on Tuesday at midday, and don't forget the social with Donald Trump next Wednesday at 8 o'clock. Have a great afternoon and a good weekend. Cheers. Bye-bye.
Thank you, everyone.
Bye-bye. Thank you, everyone. Bye.
Thank you.